Bigbear.ai, a company that's been making headlines in the AI space, with its stock price increasing over 22% in the last 3 months. Is this a hidden gem or a risky bet? Let's take a look. Bigbear is a tech company that operates at the intersection of artificial intelligence, national security, and critical infrastructure. The company focuses on providing AI-driven solutions to enhance government services and defense operations. Recently, Bigbear.ai has secured significant contracts, such as an agreement with the US Department of Defense for its Orion decision support platform, highlighting its relevance in mission-critical AI applications. The company is also expanding into various sectors, including smart supply chains and advanced manufacturing, through partnerships with organizations like Austal USA. Moreover, Bigbear.ai's collaborations with industry leaders such as Amazon, Palantir, and Autodesk showcase its growing enterprise adoption and the effectiveness of its AI-powered solutions. At the end of the first quarter 2025, the company reported a whopping $108 million in cash, more than double what they had at the end of 2024. They've also cut down on debt by converting $58 million worth of convertible notes into equity. This improved liquidity gives Bigbear.ai the breathing room it needs to invest in growth initiatives without relying on costly external financing. But it's not all sunshine and rainbows. They are ramping up R&D efforts and absorbing costs from their recent Pangiam acquisition. Whilst these moves are strategic, they won't lead to overnight profitability. Now let's look at some of the challenges facing Bigbear. One major risk is the variability in federal procurement processes, which can cause delays in funding and contract awards. This has led to excess resource capacity and increased expenses, resulting in a wider loss of $7 million compared to just $1.6 million a year ago. Additionally, revenue for Bigbear can be quite lumpy, fluctuating based on government awards and contract completions. The company reported a modest year-over-year revenue growth of just 5%, missing expectations by 3.2%. Increased R&D spending has also pressured margins, causing their adjusted gross margin to dip slightly. So what about the opportunities for Bigbear.ai? It is positioned strategically in a high potential area like AI-driven defense and critical infrastructure. The global security landscape is pushing governments towards greater defense spending, which has helped Bigbear.ai secure contracts like the one with the US Department of Defense. They're also expanding into smart supply chains and advanced manufacturing, partnering with companies like Austal USA. Their collaborations, including those with industry giants like Amazon and Palantir, are solidifying their position in the market. Plus, their $385 million backlog shows strong customer demand and revenue visibility. So what about valuation? Bigbear.ai is currently trading at 6.45 times forward price to sales ratio, which is above its historical average. Despite the recent stock jump, operational execution remains a bit uneven, with revenue volatility and widened losses raising concerns among some investors. Analysts are predicting a loss per share of 41 cents for 2025, which has widened from 21 cents just 2 months ago. This change signals declining investor confidence, making it crucial to weigh whether the current valuations are justified by the company's progress. So what's the bottom line? Bigbear does have compelling long-term opportunities, but its financial challenges and operational uncertainties do raise a few concerns for near-term investors. Now, whether you invest in Bigbear.ai now or in the future will depend on your own investing strategy and risk appetite. However, from a technical perspective, the chart is trending up, showing buyer interest. For a full technical analysis of Bigbear, watch this video next.